Hi, welcome to We Explain. In this video, we are going to discuss about RBI has taken some monetary policies. Have you heard about RBI reducing the repo rate by 25 basis point? That means the repo rate, which was 5.5%, has reduced to 5.25%. So in this video, we are going to discuss about what is repo rate, what is reverse repo rate, what is OMO, and what is significance of increasing or decreasing it, and how that is related with the UPSC exam preparation. So let us dive into it. So let us start with what is repo rate. Repo rate, REPO, that means repurchasing. What are we repurchasing here? The banks can keep the government securities as collaterals with the RBI and take some money out. That means RBI is lending money to the commercial banks with the government securities as collateral. That is what the repo rate. So when the rate is reduced, then banks can take more money from the RBI. That means whenever the repo rate is reduced, the lending capability of the bank increases or more money with the bank, then of course they will transfer those benefits to the individual borrowers like you and me. So our EMIs can come down, our loan interest can come down, thereby more money in our hand, more spending will happen. That is what the basic concept behind the repo rate. Now there's another concept also, what is known as reverse repo. So repo is there, it is the reverse of it. So of course you know that. That means it is possible that banks can deposit some excess of the fund with the RBI and earn interest of it. So you'll ask me, sir, what is that? Is it really RBI will take money from the commercial bank? Yes, of course. For example, it is basically a lazy bank. That means, see, you and me can default and we have Vijay Malaya kind of people who can escape from India taking the money. So some banks will try to do this also. They'll deposit the money into the RBI and they'll get some interest, but the interest rate is very low. It is lesser than the repo rate basically. So repurchase is also possible. Reverse of repurchase is possible. Reverse means what? The RBI will accept deposit from the banks and in return they will give the interest. That is a reverse repo. So when the repo rate is reduced, obviously reverse repo rate will also be reduced. Both has the same implication. That means more money into the market. So what is this and why this bank RBI is doing this? RBI is doing this because they want to do economic development, or you can say promote GDP growth or economic growth, you can say. How that will be done? That means lower the interest rate, higher the spending from the people, the higher the demand from the people. The higher the demand, what will happen? There will be more economic investment happening and there will be economic growth happening. But for that, I'll help you in understanding one important thing. If you look at last quarter, that means last year Q2, the economic growth was 5.5%. And this year it is 8.2%. So basically, the economic growth is good, or not the best, but it is good. But still, why the RBI is reducing this, that you have to understand. And here comes another important character, that is inflation. Inflation, the latest September inflation says the CPI is just 1.54%. Can you imagine? Our goods are becoming very cheaper and whatever we are buying is very cheaper. That's what the official data says. But here you have to understand one thing is the RBI's threshold of CPI or the inflation is 4% plus or minus 2. That means the least the inflation can be 2% or the maximum it can be 4%. So it is well below the 2%. So there is a cushion for the RBI to further increase the money circulation into the economy to promote the economic growth. Okay. In addition to that, they are also doing OMO. OMO means open market operation in which they are going to purchase government securities up to 1 lakh crore. So that is additional money into the economy. All this is to boost the economic growth in India. Now, there's another angle of looking into it. See, you know that US has levied heavy tariff on India. Even today's news that additional tax will be levied on India's imports. So there is one trick possible, maybe I will term this surgical strike against this tariff. So how it is possible is when the interest rate is reduced, the rupee depreciates. The rupee depreciates. Okay. Or in other words, when the interest rate is higher, the rupee appreciates. When the interest rate is less, the rupee depreciates. So depreciating rupee is good for the export. The export becomes cheaper. So to nullify the effect of the higher tariff, it is possible that RBI could have done this also possible. So hope you have understood what is repo and reverse repo and OMO. See you in another video. Thank you very much. Bye-bye.